Hi everyone, Carol Van Landingham with eXp Realty. Today we are interviewing one of our preferred lenders, Elliot Bowman, and he's with Osland Mortgage. And I just wanted to introduce you to him. You've probably seen him before. He's been on an interview with me before, but he is actually going to give us a lot of information up to date, what mortgage rates are doing and all kinds of things. So welcome, Elliot.
Thank you. Happy to be here.
Yeah. So tell us a little bit about what current rates are. I know I heard last week they dropped a little bit, but just kind of give us an overview of what's kind of happening and what you see as we're going into the summer months.
Sure, absolutely. I know there was a lot of optimism at the beginning of the year that we were going to see this great rally and rates were going to come down into the fives and maybe sixes. And unfortunately, we haven't seen that happen. And I don't know that we're going to see it anytime in the near future. You know, what it was at the end of last year, the big drive was inflation's coming down. And when inflation comes down, the Fed's going to cut rates and it's going to translate to lower interest rates. But the data hasn't really supported that. Unfortunately, you know, inflation has come down, but it's still just kind of staying stubborn. They have a goal of 2% inflation. We're just kind of stuck at 3% or 2.8, or it keeps kind of hanging out around there. So the Fed hasn't really started doing any interest rate cuts, and therefore the entire kind of financial sector is just waiting for that to come. And so we've just been status quo. Really hasn't, I mean, it might go up or down 0.1, 0.2. We really haven't seen a whole lot of movement in the market yet. You know, coming up through May, I'd say most conventional loans are in the ballpark 7% range. FHA and VA government loans maybe in the mid sixes, you know, all depending on credit and down payment and all of that. But we've kind of been stuck there all year. So
Talk to me a little bit about jumbo loans. I have a couple of people that are like over $1 million, and what are those? Are those usually higher than the other ones?
Typically, yes. Yeah, we're probably seeing more like 7.3, 4, 5, you know, on a jumbo loan.
Okay.
There are some creative ways to get around that. So all counties in the country, the maximum conventional loan is 766,550. So $766,550 loan amount, and then your down payment on top of that. So if they're putting 250,000 down, you could have $1 million. But for most people, they're not putting that much down. Denver County, Adams County, Broomfield County, unfortunately not Weld County, have what's called a high balance limit. So it's kind of a in between where you could still put 5% down. That gets you up to 816,500 loan amount. So if you can get up to 816, you're still basically a conventional loan. But once you get above that, it's jumbo. But another creative way is doing a first and a second combination. That's been really popular. So we do a first mortgage at 766,550. That keeps your interest rate, you know, right with all the other conventional loans, say 7% today. And then you can do a home equity line of credit or a fixed rate second mortgage, close them both at the same time. And that actually we can get away with as little as 10% down. So we can actually do to a $750,000 second. So you could almost do $1.5 million together and then actually only have a 10% down payment.
That's interesting.
Yeah. So that's what a lot of my clients have been doing for jumbo loans to avoid those higher interest rates. And
good to know.
Yeah, and then you have the HELOC, focus on that. The interest rates are higher, maybe close to 9%, 8.5%. But if you focus and pay that down, then you have an open line of credit and have that kind of flexibility of having a HELOC already there ready, you know, as kind of something in the background. So maybe somebody's selling their house, they pay off the HELOC and just leave that there. So that's been a popular way to kind of avoid the jumbo loans. Not that there's anything wrong with jumbo loans. They're just,
but they're a little bit more expensive. So yeah, that's great information. I have a seller who I'm going to give that information to. That's awesome. So talk to me a little bit about first-time home buyers. I know that we're starting to see a little bit, even though people have been on the fence and waiting, and we're seeing more activity. There's obviously, we're kind of almost to about a neutral market where we have been in a seller's market and we're becoming closer to a neutral market. And there's not a ton of inventory, but there is a lot more inventory than we saw maybe 2 or 3 months ago. So talk to me a little bit about what you're seeing with first-time home buyers and some of the challenges, some of the programs that are available to them.
Yeah, oftentimes, you know, it's the first time home buyer, it's tough to save up down payments. One thing I always tell people is you can always get a gift from family. That's been a lifesaver for a lot of first time home buyers. But if you don't have a family member willing to step in there, there's another option. There are programs with 0% down. So Colorado has CHAPA and CHAC, CHFA and CHAC, and those are government run bond programs. But those all have income limitations as well. So they will help you put zero down. But actually, I was just at a conference this last week, United Wholesale Mortgage, UWM. They're the largest lender in the country now, just passed Rocket last year, and they just rolled out their own in-house 0% down program. So, and there's no income restriction. So
Wow.
it just exactly. Yeah. So they'll give you up to $15,000 towards it. And a lot of these, same with CHAPA or SHAC, they're second mortgages. So it's kind of like I was talking about with the HELOC. You have your first, say, at 97% of the purchase price, and you've got a 3% mortgage that is your down. Instead of a down payment, it's a second mortgage. There's no monthly payments. There's no interest rate. It's just, it's a loan for your down payment. And then if you ever sell the house, you have to pay it back. Or if you refinance the loan, you have to pay back that 3%. So the idea is, you get in the house with, basically just paying your closing costs, or if you can negotiate seller concessions to pay that, very little out of pocket. And then as the house appreciates, if you sell it 5 years down the road, maybe it's worth, $50,000, $100,000 more. And then, it just gets paid off at that time. And yeah.
That's a great program. So you have access to that program as well?
Absolutely. And we work with 65 different lenders, and a bunch of the lenders have their own kind of unique twists on down payment assistance. And
what would a first-time home buyer need to know if I was going to send them to you? And like you said, there's no like income cap or limit or whatever. Are there any other restrictions that they would need to know about?
Different programs have different credit requirements. I would say if anything above 680, you can typically go conventional loan, and those have a little bit more favorable terms. If you're under 680, you would probably end up in an FHA program. And those ones, you can still get away with 0% down from the state there, but it kind of bottoms out at about 640. If it's below that, we don't have many options for down payment assistance if the FICO is too low.
Okay, so 640 is what your FICO score needs to be.
Correct. Yeah, I mean 680 opens you up, and then the higher it is, the more options you have available to.
Okay.
So, yeah.
All right. That's great information. I'm putting this out on my YouTube channel, and so all of the people that follow me are going to be able to see it. But I have a lot of kids I say kids because my kids are in their 20s, and a lot of their friends are starting to look at buying a house, and that's really good information to have for them. So, okay. What other things did you learn at the conference that you think would benefit our listeners that are looking to maybe move up, move down, any kind of different mortgage options that they would need?
Yeah, no, some of the unique things too, it's talking about, the cost of waiting, that if you wait for interest rates, why don't I just wait till rates come down, if and when they come down?
Right.
The problem is you're paying rent at basically 100% interest the whole time. And even in this market where the interest rates haven't come down like we had hoped, house prices still keep creeping up at 3%, 4%, 5% a year. And so even if the rates come down, they say for every 1% they come down, there's another 5 million people jumping into the market. Gets more competitive, prices keep going up, and even though the interest rate's lower, now the house is this much more expensive, and the payment, you didn't really gain anything. Whereas if you've been paying a mortgage instead of rent, you would be slowly paying down that mortgage, you're gaining equity, and as it goes up 4 or 5% a year, you get that in your pocket rather than paying your landlord to do that. So
I love that.
Definitely trying to get in as quick as you can. And also had a great speaker. Barry Habib is kind of the mortgage expert in the nation there. And, he talked a lot about inflation and what's it going to do. And you can kind of look at the Fed is really looking at the rolling 12-month average. We're not really seeing it come down. But the good news is that they have a dual mandate. They're supposed to worry about inflation, but also unemployment. Now, it's never good news when people are losing their jobs, but even if inflation doesn't move, we're right at that 4% bubble. If we crack over 4% unemployment, even if inflation hasn't come down, there's a lot of expectations that the Fed will be kind of have their hands tied and need to cut interest rates to help control unemployment. And so we're right there, you know, that could happen in the next few months as well. So
good to know. Do you
yeah.
have anything like a blog or a YouTube channel or anything where you give like weekly updates on what's going on in the market or anything like that?
I do not, but that is a great idea. I do have my
Okay.
website, yourmortgagecopilot.com, and we do have a blog, but not really getting into the, you know, not
Like
into like a weekly update on rates and
like
whatnot.
locally even. Okay.
Yeah,
Okay.
yeah.
All right. We'll send people that. I'll put the links to that in the bottom of this so that they can link to your website. But again, Elliot Bowman is one of my preferred lenders. He's worked with several of my clients and he's really great to work with. He knows his stuff. So if you're looking to get a loan, I'm going to refer you to Elliot Bowman. So
Thank you
anyhow,
so much.
yeah.
I appreciate
Yeah.
it. Thank you, Carol.
So yeah, thanks so much for jumping on with us today. And yeah, we will talk another time. Thank you.
Sounds great. Looking forward to it.